Block in Order, your one-stop legal shop for all things digital assets. I'm your host, Kyle Lawrence, and with me, as always, he could have given us help, but he's given us so much more. Mr. Moish Peltz. You get a
Hey, Kyle.
USDC
How
if
you
you
doing? I don't
know
even
what
know what
that's
that means.
from.
I'm just going to roll with it.
Okay. It's from it's one of my favorite movie quotes of all time from an underappreciated 1990 Bill Murray movie called Quick Change.
I've seen a lot of Bill Murray movies, but I don't think I've seen that one.
All right, we'll put that on your to-do list. It's fantastic. It has
It's
nothing to do
on
with
my
what we're
queue.
talking about today.
Okay, well, that's fine too. It doesn't have to.
No,
Just
it really
I don't
doesn't
know.
have to.
I'm not familiar with your game.
Go check it out. We'll put a link to that in the show notes as well.
There you go.
So I want to thank you guys. You could have given us help, but you've given us so much more.
Well, Moish, we had a very special guest come by. We just wrapped up our interview with him, Neil Thakur, the managing director of Teknos Associates. Teknos is they are friends of the firm and friends of this show, and we've done a lot of work with them. They are a valuation firm, foremost, among other things, and they have really taken the lead in the past few years of conducting valuations for digital asset companies, people who are launching tokens and who are really releasing all forms of digital assets, and they've been getting in on some of the Bitcoin treasury company action as well. So, Moish, what were your initial takeaways from our conversation with Neil?
Well, I mean, it's such an interesting vantage point that Neil and Teknos have in terms of seeing just all the activity and all the token issuances and how people issue and why they issue and sort of the regulatory and risk ramifications of that. So just that I think that just really bleeds through in everything he was talking about.
Yeah.
And we certainly got in that experience working with them on our mutual projects, but I think it's really nice to kind of have a more unstructured conversation here and hear from Neil what he's seeing in the industry. And even though we're very excited about everything happening in the United States and a lot of onshoring and a lot of entrepreneurship happening in the United States, it doesn't mean that all the valuation and tax issues go away. And so that's what we talk about for a fair bit of the show.
One thing that he mentioned, it came up organically in the conversation, and it's something that I guess in the back of my mind I had noticed, but had never really crystallized. Earlier in this year, I'm going to backtrack a bit. Earlier this year, after the inauguration, the talk was everything is going to come back to the United States. We have a friendly environment now. Everybody who was going offshore to launch a token or to start this or that company, now they can do it here. And slowly but surely, we saw that wasn't necessarily the case. And he nailed it. He has a more global view with what he does. He's based in the Cayman Islands. We're obviously here in the US, but he, candidly said it, a lot of people, there's still a lot of hesitation to set up these companies in the United States, whether it's taxes, whether it's the ever-changing winds of the political pendulum, whatever it may be. But he really, that really crystallized the point for me that I guess I'd never really, I'd noticed, but didn't realize, if that makes sense. So it's interesting to hear him talk about how there's still offshore companies, even with a friendlier US, people are still looking offshore.
Well, look, people were never starting hedge funds. They were never getting the feeder because they didn't want to be in the US. It's just like, well, there's a kind of business goal that they're trying to achieve with that structure. Same thing, right? It's just like there's different business structures for different end goals, and the US can accommodate some, but not all of those. And even I think projecting forward 2 years when we have market structure and we have a new tax bill and everyone's hunky-dory, like we're still going to have a need for offshore structure and counsel and valuations and et cetera.
Right. Well, we'll always have a need for the folks at Teknos, and Neil and his partner Casper, who couldn't make it as well. We'll put their contact information down in the show notes. If you have any questions, please contact us or feel free to contact them. They're awesome guys. We love working with them. Moish, you just released an article that you co-wrote with them. They really do wonderful work in the space, and I highly recommend you check them out. And with that, let's kick it over to our conversation with Neil Thakur, the managing director of Teknos Associates. Well, joining us on Block in Order today, a very special guest. We have Neil Thakur, the managing director and co-founder of Teknos Associates. Teknos' blockchain and cryptocurrency group provides valuation services for tax, financial, reporting, gift and estate, and corporate planning purposes, and has done so since 2016. As leaders in the space, they cover all digital assets, including cryptocurrencies, NFTs, other tokens, and entity interests in digital assets. And their clients range from early stage projects to large cap L1s, foundations, private equity and VC funds, high net worth individuals, and Web3 executives. So Neil, welcome aboard. Thank you so much for joining us today.
Thanks for having me, Kyle. I definitely appreciate it and excited to get started and talk through everything that you've just described.
Well, we're also excited to have you, and it looks like you're actually in your home base, but you've done some jet setting of late. Why don't you fill us in on some of the things you're seeing in the world?
Yes, we are. We are distributed as a company and decentralized, if you will, very consistent with the industry. So yes, this is the home office and headquarters of our firm. But yeah, you're exactly right. We do a fair amount of travel. Have hit a lot of the conferences that we're all kind of familiar with. Just recently, we were in Token 2049 over at Singapore, which was a very interesting and I think fruitful conference, just from an educational perspective and just from a client relation perspective, as well as often we tend to see a lot of our clients and partners at these events, just because they tend to be very I think global in a sense of just the nature of the industry and just the way the entire kind of community works in general. So yeah, it's been very positive. But yeah, just trying to catch up on sleep is not very productive in this environment these days.
Sleep is overrated.
Yeah, we were just talking about how you'll be on Telegram with someone for 2 years and never actually meet them or talk with them until you happen to run across them at a conference, planned or unplanned. So that's always a fun experience. And I'm curious, there's always different vibes at all these different conferences, and you're in the stretch of a run here. Just curious, like what are people talking about now? What are people excited about? Bitcoin is at an all-time high this week. I don't know if the industry feels that way, but I'm curious, like what you're seeing out on the road.
Yeah, it's probably the narratives that you'd expect, right? So it's interesting. Like, we've had this dynamic kind of go through the industry in general, and historically we've been spending a lot of time on projects that are launching, and a bit of that has taken a side kind of view as we focus on a lot of institutions coming into the space. So that's are obviously very popular, but that is coming down a bit as we see some of those multiples on value kind of shrink a bit with some of these debts that come in. But stablecoins, right, are huge, right? I think that has been kind of the topic of discussion around the world, focused in on that the regulatory part of that, depending on what jurisdiction you are in. But certainly the U.S. is really focused in on making that happen with some of the regulatory movements that have been made. So those are all good. So that is an area of focus that we're seeing a lot of interest in. And so obviously, like, the institutions are getting involved, right? And so you have a lot of these larger players where that capital is coming into the space, which historically we haven't seen. It's always been like the venture funds that we all know that are involved with it, and the traditional projects. But now, as you see kind of larger, bigger players express an interest in some of these investment opportunities, either through debts, SPACs, pipes, and obviously stablecoins, all of that is bringing capital into the play, and from all walks of life. And so with that comes different types of scrutiny, as we will see coming down the road. Everything from financial reporting and tax, and people taking a little bit more seriously. Not that it wasn't before, but you start issuing a little bit more capital from traditional players, and they have different risk profiles. We're going to see a little bit more scrutiny around this. So, yeah, I mean, I think it's all this capital is starting to come in, and from the more traditional sides of things, and I think it's good for the industry, right? If you think about overall capital in the industry associated with just the crypto world, it's fairly small when compared to like the larger financial markets. And as allocation starts to increase across the board, we're going to see a lot more of I think the emphasis on the market. So yeah, excited to see where it goes. But those are some of the narratives that we're seeing out there in the market.
Yeah, that matches up really closely with what I was just at a big crypto legal conference, and the institutionalization of everything for sure is a big one. stablecoins with the Genius Act, and now people waiting for regulations and further promulgations to go along with that. Everyone's kind of absorbing that and figuring out what to do next. And yeah, I mean the DAT thing is something that we've had a hand in some projects as well, and it is like this weird thing, right? When the net asset value of their pot of crypto is they're trading at a discount to that. Like what happens, and now you're seeing M&A and other reinstitutionalization of what's happening there. So it's super fascinating. Well, so I guess the question is, well, maybe you can tell us a little bit about Teknos. I was going to ask about how that affects Teknos, but why don't we talk about what Teknos is and what you do, and then we can get there.
Yeah, happily to have that discussion. And thanks for setting us up in terms of overall kind of broad strokes of who Teknos is, Kyle. I do appreciate that. And just to provide a little bit more context, just at the highest level, we are a valuation advisory services firm. We've been around for about 20 years, and in this space for about 10. And it's interesting just how we fell into it. It's we've always had an interest broadly in technology and this particular space personally. And then, one day I got a call from a very well-known client in this space, well, to-be client at the time, called Ripple. And they had some XRP with a market maker, and they were trying to figure out how to price the deal. And there was some tax effects associated with it, and no one wanted to touch it from a valuation perspective at the time. People are like, "What the heck is this?" Right? It was criminal, right, to think about the industry in any regulatory way. And so we took a stab at from a financial modeling perspective to figure out the complexity of the analysis and try to understand kind of what it was worth. And literally from that exposure, we started getting calls from other guys in the space over the next, few years. So think, Chainlink, Filecoin, Hedera, Uniswap, all these guys had different use cases where there was either a digital asset that was going to be issued, or it was minted recently, and there was potentially, some tax effects associated with it, or there's financial reporting associated with it, or it was just for a deal. There was some sort of structure where you had this asset that had speculation around what the value of it was worth. And so, to do any of these transactions, you need to understand the underlying basis for that value. And so, we just started into it, and we survived the ups and downs, the volatility that we all see in the market. A lot of sleepless nights of, is this industry going to be somewhere? Does it make sense for us to put all our resources into it? And, at the end of the day, here we are working on, having worked on thousands of projects in the space, everywhere from looking at, the digital assets themselves to equity, complex securities, and IP, right? Which, obviously we'll get to. But anytime you look at this particular industry and you think about just the global nature of it, there's always kind of valuation related or centric issues that come up when you're talking about things that are cross-border related or just kind of moving around any kind of complex manner. That's where we find ourselves. And, just as a firm at this point, we are just mainly focused on that particular industry, if you will, just because of the complexities and it, just seeing what's happening here in the U.S. In relation to the rest of the world, and seeing some of the regulatory kind of influences, which all are very positive now, as opposed to some of the things that have happened historically. There's just more expectation that, diving deeper into some of the complexities of it will make sense for us. And so, we find ourselves kind of well positioned just based off of our experience in the space and a lot of the work that we've done. So, that's hopefully a little bit of background on
no, that's great. And we applaud the entrepreneurial spirit. You're talking about when XRP approached you and nobody else wanted to touch it. We, as when Moish and I started the digital assets practice group, there's a lot of that going around. There's still a lot of that going around in the legal space, which is kind of crazy. But as somebody who works in the M&A field, as I have for nearly 20 years, obviously I've seen a lot of, QOV reports and valuations, hundreds, if not thousands. And there it's easier. It's more of a of a straight line. It's, you have a business, this is what their revenues are, this is what their EBITDA is, this is what the competitor does, this is, all that. This it's easy metrics. But when now it's easier for you than it was a couple of years ago. But when you're starting with XRP, without giving away the secret sauce, where did you even start? How would you begin to do that? That's fascinating.
Yeah, it was a struggle at the time of trying to understand, how this value that it was trading on an exchange, and think about the exchanges back then and how that was all like, what could we put in terms of trust of what the value was? How do we understand, what is this truly a liquid asset? If so, where do we start? And then from there, when you talk about potential kind of restrictions on this asset, what does that mean for potential value on that? And so we looked at it very similarly to some complex securities of call it option pricing theory and binomial models, and that type of world of a restricted asset has potentially a different type of value if there's some optionality to it over time. And so we started with that kind of construct, and we settled on a way of calculating a discounting mechanism to kind of incorporate potential valuation related issues on a lot of this stuff. And that's kind of where it started, right? You have this asset that has liquidity issues, has marketability issues, and then you kind of build a case around that. And so that's kind of the central kind of thought process around it. Now, obviously, there is more data, but candidly, there is a lot more data. But are we still in a better place? Because what are the metrics that you should be looking at, right? In terms of and now we're talking about things that are traded. What can we trust? What are standardized metrics in the industry in terms of like adoption and users and all of that? Because quite frankly, like, if I try to put some sort of multiple on that, I'm not really trusting all that very much easily, right?
That gets back to the DAT question, right? Which is how do you value these companies, and why is the MNAV different than the underlying? And then it's like, well, that you can run a line from that all the way back to like the tokens are on Mount Gox, so what are we going to do? So
you're exactly right. So when we just remember those multiples of NAV, right? In the beginning of all the DAT kind of craze, it was like 5 to 7 times, and the MicroStrategy guys and BTC is something else, right? Now you've got all these other assets that are coming in, and now it's getting closer to 1, and you're thinking, and everyone has the narrative like, oh well, we're not just this company, there's going to be all these other operating capacities that are going to increase value above and beyond of all of that in terms of staking mechanisms, et cetera. But is there really value beyond that? I don't know, right? It just depends on the specific use case, but you're exactly right in terms of some of the things that we're starting to see. Like, does the market really truly see that and expect that type of value appreciation? I don't know, but
someone raised the question. I'm curious what your thoughts are on about the same question applied to stablecoins, even take USDC, which a dollar is a dollar. However, and this is the argument that the banks are saying, is you can't stake stablecoins, or at least the stablecoin providers shouldn't be able to stake stablecoins because then they're presumably not worth a dollar because they have the ability to appreciate and generate yield. So something that's worth a dollar but generates 4% yield, I don't know, is that worth a dollar? So I'm curious if that's something that you've gotten into in thinking about stablecoins and how the market should think about it, or people in the industry should think about. What's a stablecoin worth?
You're exactly right. I think the stablecoin kind of concept is very interesting because as you have the ability to stake, and there's differing opinions on that stake and that interest and what that represents. Is that actually a security? Is that really income? How do I recognize that? And is it worth more than just what I'm producing at the end of the day? I think it just kind of depends on the use case for it, right? Banks versus other guys. And then on top of that, right, like really the concept is to get people on chain, right? That's a lot of the focus around, just having these payment rails that exist, right? It's just to bring the traditional, world into our kind of digital asset world. And, everyone's talking about, let's say 2030, everything is going to be something related to blockchain kind of infrastructure, which is great. And then you have the idea of like, this 24/7 marketplace and all of that. If I have a company and look, Robinhood has already experimented with that, and you see other guys that are saying, hey, I'm putting my securities on chain and everything, and that's great. What does that really represent in terms of value? Does it give me like the same rights as others? And, is my is this claim to this asset equal in all capacities? I think there's different schools of thought on that, but yeah, the idea is that we're getting everything just to a point where everything is traceable and on chain, and I think that is positive, right? But in terms of like the value appreciation, I think the jury's out on that. I think the markets will play themselves out on that, but right now, not great metrics to really track anything just yet.
That's a great point. And we can all talk about the modernization of the financial system, which is a big driving force of this. The Genius Act, that's part of the DNA of why that legislation is so important. I mean, just to update the framework and the mechanisms that these banks and old institutional payment solutions are using, it's a no-brainer. But you're exactly right in that it does also present some risks that we can't possibly necessarily envision. I mean, some people can, people smarter than I can, but you're right. We're looking at a 1, 3, maybe even 5-year timeline before we can look back and say, well, that's great that we solved this problem, but now we have these other things that stem from it. And one thing I always like to think of is, you mentioned Robinhood. It's great that I can go on my phone and I can buy, NVIDIA in 5 seconds. But the problem that introduces is things move so fast, it's almost impossible to quantify what's going on. For someone like you, I think that presents a unique problem that didn't exist before. And I'd be really curious to see how that plays out. There's no real question in there. It's more just me pontificating. But I think that's a really interesting thing that people, progress and number go up and Bitcoin is an all-time high. And that's all awesome. And we all love to just run forward and don't look back. But sooner or later, we're going to have to and see where along the lines that we need to improve what's already been improved upon.
Oh, yeah. I just think about like just some of the traditional things that, we all kind of come from. You think about like research analysts and stuff like that, the equity market. And we're hearing about like, oh, we don't need to do quarterly anymore, right? Maybe it's going to stay. I mean, I'll leave that alone.
Say that.
But,
please don't say that.
What about that world, right? How am I going to, what are my earnings estimates, right? And if you've got this digital asset kind of playing out on this and there's 24/7, like, what are the demarcation kind of points here for trying to understand what the expectations are, and as a company too, how do I fit into all of that? It'd certainly be interesting. But those are things that we are, as a kind of a valuation firm and advisory firm, things that we're thinking about constantly right now. So agreed on that.
So let me ask a stupid question, and I say it's stupid not because the three of us think it's stupid, but because we get asked this all the time, which is, all right, I'm forming a blockchain company. I am planning at some point in the near distant future to issue a token. Like, what's the valuation? Why is that relevant to me? And I guess my part two to that question is, is it relevant, or more or less relevant to me if I'm forming this company somewhere offshore versus I'm energized and excited and want to form my company and issue my token in the United States?
Yeah. God, so much to go with there.
Yeah. Start wherever you want, and it's just like
question,
it's just a stupid question. People ask this thing. So
it's like the scene in Back to School. I have one question in 27 parts. That's what Moish just did to you. So.
I have only one question for Mr. Mellon. In 27 parts.
No, look, it is, and look, questions that we get constantly, right? So I guess on the token side of things, if I'm issuing a token, there's obviously a lot of use cases to it. I think one of the biggest things to think about just broadly is, people say this all the time, don't make the token the product. The token should be kind of complementary to things that you are already doing. that said, there's plenty of meme coins.
One would hope that it's not
you would think
token
so,
issued
right?
but there's some utility or function
Right.
within an ecosystem, right? It's
Yeah,
accomplishing something that some other token doesn't already accomplish, right?
Right. And that would be the idea, right? And so you've got this token that is complementary to this concept, right? Whether it's in DeFi gaming or other types of kind of industries. And so, if that's the case, and then you have a company that's gone out and, raised money, and either probably from the venture world. And a lot of times it has this massive, like, safe valuation cap, and there's this implied value towards it. And then you're going to issue a token. So in the early days, the idea is that, the token, just because it's speculative, may not have a lot of value at early. And there's different methodologies to get there to kind of justify that concept. There's a lot of things, especially in the IP world, we talk about kind of cost-based methodologies. There's market implications as well. And through a marrying of those, you can still at very early stages justify why that value is low. And the reason why that makes sense, and then some of the use cases around that of distributing the tokens to founders and early players in the market to understand and take full value of that, like what we do in equity, right? Like if someone's issuing shares of a company that's just founded, it's very similar, right? This is just for the token part of it. That's why the value of that token may be on the lower side, and why it makes sense to issue those tokens to entities and individuals at early stages. Once that grows and the token launches and the product actually, separate from that, starts to take shape, then you start seeing more value. And then, do you do this here in the US? Do you do this, offshore into the Cayman, Switzerland, Singapore? That is, and I will probably push that question to you, but I will just say
Fair
this.
enough.
On our travels, just, being in Switzerland and Singapore and other jurisdictions that we know a lot of folks in the Cayman. It's interesting just to see that concept. I can say that just through conversations I've had, here in the States with certain either regulatory bodies or other people close to the industry, there is an emphasis to have things here, right? And you've seen like the DUNA structure, right? All of that, and with the regulatory kind of winds pushing back to the States and making it safe for us to operate out of here, the concept of offshoring things may not be necessary. But I think what's interesting is that now that has become, because of the way that the U.S. has changed kind of back and forth a few different times, it's almost like, like the Cayman or offshoring is the conservative way to go, right?
Right.
So, it's just really weird to see that. And so I would say like a vast majority of folks that we talk to are starting a project still, prefer just, hey, look, we know this is tried and true. We know where the issues are, right? In terms of, separating 482 and all of that, like that concept of, a disaffiliated entity and all of that, right? We know that, hey, yeah, it hangs by a certain type of concept of, justification, if you will, right? In terms of, the relationship between the two. What's the value if I'm licensing things, or they're, if I'm transferring the property, et cetera. I know what I'm dealing with there, right? I know how to justify that to a certain degree. And, the Cayman guys or the guys in Switzerland or whatever other jurisdiction you want to do this in, we know how to operate on that. And so it's interesting, like, while I feel like there is an emphasis to bring stuff back, and I think we will have more things start and structure out here in the States eventually, just in the short term, short to medium term, I still think we can expect, the offshoring kind of concept to continue with a lot of projects, at least for those who I've spoken with. But again, specifics, I'm curious to hear kind of what you guys are seeing on your side.
Well, that makes a lot of sense, and I think we've done both the offshore and the DUNA structures, and the concerns with the DUNA structure, right, is the tax, right? That's one of the big hurdles to making that process as smooth as what's often advertised as the offshore structure. And so, right, so I know now, like we talk about medium term, there is a tax bill or tax fixes that are being proposed, and I think those kinds of questions are are obviously what's circling around, but that's not where we are today.
Yeah.
And so, yeah, you solve for a lot of the regulatory pieces with a change of administration and a more friendly environment in the U.S. for entrepreneurship, especially in this industry. But you still can't get past Treasury, and so that's like, so that makes it difficult. So you can, it's just not as efficient, right? And so
Yeah.
a lot of people want to be here. I think want to be here for good reasons, and they just have to understand, the different risk appetite and cost of doing it in either
Yeah.
direction.
The flip side of the coin is, and it's great points, Moish, is that this is still a global industry. And if you are, if you're raising money or you're issuing a token or whatever it may be, and you're focused solely on United States people, that's one thing. They're already paying taxes here. But if you have one of these pass-through taxed entities, an LLC, an LP, or the functional equivalent, and you're based here and you have people from overseas coming in, they don't want to pay it. They don't want to file a 1040 and deal with that. So I'm still getting tons. In fact, I have one I'm working on right now where we have this master feeder structure where the people are in the US, but they have an offshore fund for the overseas people to help shield them from that. That is still very much a top of mind concern for people, as it should be. I don't want to deal with, I don't want to deal with the IRS, and I live here.
I know.
Yeah.
It's so true. It's so true. Yeah, you're exactly right. When you think about the capital and the funds that are coming from the offshore kind of concept, it's exactly the concerns, right? And the issues you have to deal with there. So I hear you on that.
All right. Well, I wanted to turn to something that we recently collaborated on together, which is I know that you guys relaunched your website and we worked on some content there.
Yeah.
So maybe, and you could talk about kind of what you're doing and why you decided to relaunch and kind of the holistic picture, and then we can dive into some of the topics that you're speaking about in more detail.
Yeah, I appreciate that that opportunity there. Yeah, it's funny because it's been this long kind of thought process for us in terms of rebranding our organization. And like the organization itself is still kind of, as I mentioned before, kind of focused in on advisory and valuation. But this particular industry has really kind of captured a lot of what we do as an organization now, and it's not going anywhere, right? And I think we got comfortable with that idea a few years back, probably like 3 or 4 years back. It's like post FTX, and then everything kind of survived, and we started to see this momentum. And I'm like, I thought to myself, like, we just gotta go all in on this and just commit. And it's just, the thing is, it's like we're a small kind of boutique firm, right? And so just finding the time of resources and just getting everyone together, because at the same time we are traveling, we are doing the work, and we are figuring all of that out, to spend time kind of doing something like this, which is something that it takes some thought, right, in terms of what you want to message out to the world of who you are and what you represent. We wanted to do it, effectively and thoughtfully. And so part of that was, putting out some more content about some of the key topics and things that we are seeing, and also kind of formulating, just accommodating all the stuff that we've done historically, right? Like, let's put some thought around that in terms of the pieces, and hence the collaboration piece like that we've done together. I think, culminates a little bit of that too, right? It's, hey, just like we were saying, like, should you be offshoring or should you not be? What are some of the things you're thinking about? What are the things that we've had to deal with in the past, and how we put that together and coalesce that around kind of a message? And so there are a lot of different things, there are topics that we can, dive into. And we thought, let's do this in a rebranding kind of mechanism of who we are and what Teknos represents, because there's a lot of people and a lot of firms that are, it's just kind of low hanging fruit. Oh yeah, we do crypto and we're in the industry, and it's like, honestly, with something that's so lacks regulation, and I know there are things that throughout the world people are putting stuff into play, but the reality is, it's like it comes down to, and you guys probably understand this, it's about like experience, right? And you have to make certain judgment calls on things when the area is gray the majority of the time, right? It's about interpretation of facts and circumstances. And That could be for IP, it could be for digital assets, it could be for equity, it could be for debt, whatever the investment vehicle is. There are different perspectives on it. And so by utilizing our kind of experience, and putting that all out there, we've written all these different pieces to help with the kind of rebranding concept of who we are. And it's funny, it's like it's rebranding, but it's just like in many ways, I think to myself, like natively, it's kind of who we are in general, in terms of this type of firm. And so that's kind of what pushed us to. They just took us some time, and candidly, technology too is a little bit easier to deal with. I mean, just through the ability to spin things up in terms of platforms and AI, et cetera. It certainly helps us, whereas, we don't need a full stack developer to do things anymore in the same kind of vein. They still have their role, but
Yeah.
for a small firm like ours, we have a little bit more leverage to be successful and get this stuff out a little bit more effectively and thoughtfully. So that's kind of where it brings us to today, and why it makes sense for us to be talking about it in terms of Teknos crypto, if you will.
Awesome, man. You can tell it's a good rebrand because it's you're talking more truthfully about yourself. It's like, oh, that's what you want to be.
Exactly,
yeah, and there's some really good we'll post a link obviously in the show notes, and there's some really great educational content to answer some of these dumb questions that people come up and like, well, why would you value token, or why would you value IP? And so to get into that topic, I'm curious, just how you guys approach valuation of intellectual property in this industry, and why people often need to do that, and just like how you work through like actual valuation challenges, and like how that's specific to this industry versus valuing just a trademark for manufacturing business.
Yeah, that's a good question, and the use cases are fundamentally kind of focused in on like what we just talked about in terms of offshoring, right? And typically what you have is these entities where you'll spin up like an operating company in the U.S., right, where everyone is functioning out of the concept of the project, and then you're thinking, hey, we may want to issue a token, and so that lends itself to wanting to do that from other jurisdictions. And as you mentioned so accurately, there are tax implications around that, right? And so if I start issuing a token, doing that out of a foundation concept potentially makes the most sense, just because of the concept around taxation and foundations, and the positive kind of attributes to that. And so if I'm going to do that, and I'm going to set up some sort of entity in a jurisdiction that's more, call it tax efficient, friendly, we'll use whatever word you want, then there's usually something that's going over there, right? There's some sort of technology, IP, either centered around the protocols or the software, or the development of that. And even if it's open sourced, right, there's still kind of thoughts that you have to think about in terms of the utilization of that. You send white papers and smart contracts and all of that. That's different than probably a traditional company, right, that is offshoring its technology. And so as that's moved over, depending on how that's moved over, either via maybe you're licensing it back, then there's a valuation implication there. If you're actually just sending all of that IP over, then there's another valuation kind of impact. And so, depending on when that's all happened and what's happened at the operating company prior, there are different kind of valuation concept, right? And there's again, we kind of refer to the cost plus of development of all of those assets. That's one kind of methodology. There's a combination of using that with implied values if you've raised significant money for the company in of itself, and it has an implied valuation associated with that, and you can combine that concept with the cost approach. There's just overall invested capital kind of thoughts. Doing an income-based approach, I would say, is not something that is particularly done, just because of the lack of clarity around projected cash flows in this industry, and maybe around staking and all of that. But usually this is done before the project is live, and that's the reason why you do it, because if you're going to transfer anything over, you want to do it with a lower tax base if you can. So, those are some of the things that we would think that are very different from a traditional, let's see what the multiples are in an industry, or what is my expected cash flow. Because when you think about it from that perspective, it's like we're talking about like an entity, we're talking about a token, a specific asset, and for a company, right? I have a product, right? And I produce revenue, and then, I can figure out what the overall implied value of the company is. If we look at it like this particular asset, like that asset's like, I don't own that whole asset. Like that's not my company, right? Like everyone has claims to that asset, and then that asset can appreciate or depreciate over time. And that's not the value of my company necessarily. Like I may have 30% of that allocation, right? And what else is my company doing? Is that there are other things that are there. So like when I'm valuing the company versus valuing the token, or like aspects of, things that my company has a claim to, there's different kind of concepts, right? And so that is where some of the challenge kind of lies when we're working with, the companies themselves, and then the token itself, and then the IP. You have to kind of allocate different types of value in between, and there can be different challenges there. So yeah, those are a lot of the things that we think about when you start digging into this. And then, you start thinking about like, sorry, not to go off topic here, but like,
no, you're speaking my language. Yeah.
I was just like, now we start thinking about companies going public. We start thinking about the M&A world, right? And so, what does that mean if I'm going to buy another, project or company? What am I buying, right? And you see some of the IPOs, which ironically enough, the IPO market was dead for the last like 18 months, and the big ones that have been coming out, they're all crypto related, right?
Yeah, that's right.
So clearly the market has an appetite for it, and everyone believes that there is. And I'm talking about asset like just the SPACs and the pipes. I mean, you think about like Figment and Figure and Circle, like all these other companies, and there's a laundry list of companies that are in line to go public, because these crypto adjacent companies are driving the institutional kind of forces around this. And so again, valuation issues very centric to all of that. But anyway, sorry to go off there.
No, it's all great stuff. And by the way, tangents are what we love. If you want to, you can talk about anything. It's fair game here. I mean, you're in the Cayman Islands, we're in New York. Like you're doing something right. So
agree.
It harkens back to what you were talking about in the beginning about how now we have institutional players in the game, and rising tide floats all boats. It's not just that institutional players are here. It's that legitimizes the space. The IPO market, you nailed it, has been dead as a doornail. I think Birkenstock had an IPO earlier this year. Well, like what are we doing here? But now that we have the institutional players, and we have the U.S. government treating this industry with a little bit more respect than the prior administration did, all of that heads in the direction of IPOs and mass adoption and improving these payment rails. It's just another check of the box of what we're talking about here. And if the IPO market can thrive, then that's certainly great for us as lawyers, and you as a valuation expert. It's great for everybody. It's just another feather in the cap. So that's great stuff, Neil. So yeah, I agree.
Yeah. You're exactly right. Just exciting to see that kind of all move forward in that vein. And yeah, there's going to be growing pains around it, and certainly expect that, if you will. But we're going to come out on the positive end of it, I think, just as an industry, because there's a lot to kind of be excited about, right? Just as this technology takes hold, and we kind of, when you really drill down to kind of the optimistic kind of side of what this technology can be, and we lose the kind of the speculative narrative of it, right? Eventually fundamentals will come into play. We just honestly, we need to standardize things. We need to get comfortable with what certain things mean, but there's a lot of education left, right, in the industry to occur there for that to happen before we get there. But we'll get there, and it just takes a little bit of time.
I don't know if you had a follow up based on your IP. You're glimmering.
Okay.
I can see it. I can see it, German.
All right, fine. No, I was just going to say it's very fascinating to me that on the one hand, there's institutionalization of all this, but then on the other hand, what I think is really exciting about IP in this industry is that it is so different than most other industries in the sense that a lot of it's open sourced, a lot of it is globalized, community based. You have contributors from all around the world, and then obviously you have much more of this internationalization. It's not just Delaware C corp. There's companies that are based in far-flung jurisdictions or in multiple jurisdictions, or there's a U.S. DevCo and like an ownerless foundation that owns the IP and is doing this. And so like, yeah, you got the kind of financialization of everything too. And so like that whole construct is really like IP is enabling that in some respects, and it makes it a very interesting, unique industry. So again, I'm not sure there's really a question there. I guess the question would be is, do you see that? Does that kind of bleed through in the work you do? Or is it just like, well, an IP holding company is an IP holding company, whatever. I'm just curious how you approach it that way.
Yeah, it certainly does bleed through in terms of everything that we do, right? Because we have to understand kind of what the underlying concepts are for all these entities, and it's different, right? I mean, at early stages, you could make parallels to other things, but yeah, if you take the long view towards it, right, in terms of what these entities represent and what they're holding, understanding what the long view is around this particular asset class is certainly very important. And so, yeah, I mean, everything from where these things are domiciled and what the relationships are amongst different jurisdictions comes into play as well, right? And so, yeah, I mean, we'll see something based out of Dubai, but at the end of the day, they'll still have a Cayman foundation, and you're like, what? Like, it's very interesting to see that come into play. There's some people who don't want to touch the U.S. still, right?
Yeah.
And so they'll work around it. They'll have their devs out in France, right? And then they'll be domiciled somewhere in Liechtenstein, and then there'll be guys still having a Cayman foundation, and then there'll be something happening in Singapore, but there will be no U.S. presence,
right?
So we see that as well. It's very interesting to see kind of the internationalization, the globalization, if you will, around a lot of what we do, and then how the technology kind of flows back and forth between these different jurisdictions, and what may be true in the Cayman Islands may not necessarily be true in France, right, and or Switzerland, right, like. So a lot of what we do is, understanding how the technology equates to value, and then you layer on whatever jurisdiction you're dealing with to figure out ultimately, what potential value implications could be, right? And that goes for the IP, the equity, the tokens themselves, across the board. That does influence things, right? And we see it just in traditional values, right? Like, having tax components to things, and how that, why you would do something here in the U.S. versus somewhere else, that's not too dissimilar. But you layer in this digital asset concept, and it is like, it's very difficult, right? And you can dive into the specifics of tokens that are launched and tokens that don't exist yet, and the rights to tokens. There's optionality of all that. If I have a token that we all hope, if we're launching a project, we hope to be the next Solana, and et cetera. But if it's not, right, and it's trading on an exchange at a certain value, but there's no liquidity to it, is it really worth that? And if I transfer that asset to a different jurisdiction, how should I be taxed on that, right? Should I be taxed on that value, or is there an implied kind of liquidity type of discount that is applied? Those are the concepts that we're constantly kind of grappling with, and understanding what the native jurisdictional kind of issues are from a tax and a regulatory perspective come in quite frequently, right? Can we do this? Can we apply this concept here and maybe not here? I don't know. It depends. And is it different than if I'm putting something on my balance sheet and I have to do financial statements? Are there differences there, right? Again, a lot of valuation concepts that are constantly coming into play here. when you start layering in an asset class that doesn't necessarily natively have like the true metrics that we're used to in terms of saying, hey, this is what it should be worth, right? I just look on an exchange, that should be it. And it's not all that simple anymore.
No, that's a great point. And it's kind of, from your perspective and from our perspective, we encounter similar things in that people call us up all the time and they say, well, what's the answer? Where do I set up? And there's no one size fits all. There is no one uniform jurisdiction. If there was, there'd be no need for other countries' laws or us to have 50 state laws. It would just be one thing and everybody would do it. If it was easy, everyone would do it. And just for our listeners and viewers out there, that's a really important thing that Neil is talking about, is that your situation is different than your partner's situation and your investor situation. And just because it worked for somebody else to set up a Cayman Foundation, it's not going to work for you. Just because somebody set up a Wyoming DAO, it's not going to necessarily work for you. There are privacy concerns and taxes and all these things. And it's probably not going to get any easier. And one thing I do want to address that I think you said that is very interesting in a sea of interesting things you've been talking about over the last hour, is there is still a slight hesitation for people to enter into the US, not just for the tax reasons we touched upon earlier, but the reality is that we have, our government changes every 2 years effectively. And right now it's very favorable and hands off. And who knows what that's going to look like 14 months from now? That may not necessarily be the case. And that's not a right or left thing. It's just that you're going to have different people looking at these things, or we're going to have different goals and different priorities in terms of what are the things they want to push forward. And I don't think that's really going to go anywhere anytime soon. Yes, we have institutions, and yes, I don't think institutions are going to let the government take it away from them. I mean, once you give something, it's hard to take it back. That's sort of the union negotiating 101. Once it's gone, it's gone kind of thing. And I think there's an element of that in play here in the United States that'll be really fascinating to watch unfold, over the next year or so.
Yeah, I think that's an excellent point, right? And that is a big part of the concern, I think, about folks. And especially the institution getting in the space, they're dipping their toes into it. But the reality is, like, I don't know what the administrative kind of policies are going to be. And to your point, right or left doesn't matter. It's just like, I think the hope is that it's just so successful and the capital is so large that it is, you can't, the cat's out of the bag, can't go back. But that there's maybe maybe I don't know.
I certainly hope so.
I'm right there with you, man. I hope we get there. But yeah, it's exactly right, and that's where you're just getting back to some of the things I said earlier. It's just like, that's why, ironically enough, the offshoring concept is still very much alive, right? Because if I know what I'm dealing with there, like, I can let the U.S. market kind of play itself out, and if it works, it's great. But we still need to figure out taxes here, right? And we still need to figure out, like, just the overall kind of regulatory kind of operating structure in terms of who we want to be, right, and what these assets represent. And so, I think that is where we kind of are cautiously kind of hopeful and optimistic about things, but we're still kind of inching our way right forward. And right, everyone says that we're going to have market structure by the end of the year, but now with the slowdown and everything, I don't know anymore, right?
I don't know.
I was in Jackson Hole. It was like a done deal, like at the Jackson Hole conference just a few weeks ago, and it was like, we are there, right? And like, that is a very optimistic group of folks, and just like just the lens that I have is very different, just because we see things from a more of a risk kind of tolerance perspective, and so obviously we are cautious about things, but it was onward and upward to the right and all that. But now here we are, unforeseen, circumstances. And do we get there by the end of the year? I don't know. That's
probably not at this point.
We'll see.
Yeah. Well, we're winding down on time, Neil, and I want to be respectful of your time. But any final thoughts or questions for Moish or myself? We always ask everybody else questions. Nobody asks us anything. I feel left out.
Oh, you guys are great, man. I love this. Has been fun, man. It's such a natural thing. This has not been any kind of interview or any kind of open or anything like that. This has been just a natural conversation that, we would have all the time in the industry. So I appreciate the opportunity to even just have it just so candidly and naturally, if you will. And, I love what you guys are doing. And it's like, the lens that you guys have and the things that you're seeing, certainly, just to be a fly on the wall in some of your conversations with some of the folks that you're talking to, I think it's very interesting, but you've got the attorney client.
Yeah, be careful what you wish for.
I was going to say, yeah. If it weren't for confidentiality, we could write a great book, but sadly, I have to keep it right here.
I love it. Well, I do appreciate the time today, guys. This has been very, very kind of you, and I thank you for that. And look forward to working together in the future. Just in general, this has been awesome.
The feeling is mutual.
Thank you so much. The feeling is mutual.
Yeah. Neil Thakur, Managing Director of Teknos Associates. Thanks for coming by, my friend.
All right. Thanks, gentlemen. Appreciate it.
Well, that wraps it up for another riveting edition of Block and Order. Very special thank you to Neil Thakur from Teknos Associates for stopping by and sharing his thoughts on all things digital assets with a specialty in valuation. We work with Neil and we love his firm. Remember that everything you see on Block and Order is meant for information purposes only. Nothing is meant to be taken or construed as legal and or financial advice. Due to the fact that we simply mentioned various assets on this show does not mean that we endorse those assets. Please conduct your own research and consult your own representatives if you're going to take the plunge. Very special thank you not only to Neil for stopping by, but for producer Moish, who nowadays wears two hats. He's the host and producer extraordinaire. So on behalf of Moish Peltz, I'm Kyle Lawrence. Take care, everybody.
See you next time.